Hi, good morning, everyone. Good morning to all the participants who joined us here. Thank you all for taking your time off your busy schedule during your lunch break or any time to join us here today. And so today I'll bring in a topic which is about, as you can see from this slide here, it's called Revolutionizing Transportation, which is the global electric vehicle outlook for 2023. So I think it's quite
Alwyn,
yes.
we can't see your screen.
Oh, okay. Sorry about that. I think I have paused in sharing. Okay. I think okay, how about now? Is it clear?
Okay, clear now.
Okay, so sorry about the technical issue just now. So yeah, let us just continue. So my topic is about revolutionizing transportation, which I'll bring out the global electric vehicle outlook for 2023. I think this is quite a decent time to bring up this this idea, this presentation, because not long ago Tesla just announced that they are coming in Malaysia. They have signed an agreement with our Prime Minister Anwar Ibrahim to solely be the sole distributor, to exclusively distribute their Tesla models in Malaysia without going through any distributors, without going through any dealers. So it's directly from manufacturers to us. So that's why, without wasting any more time, I'd like to move on, dive deeper into it. So before we get into our main topic here, let's quickly have a quick recap from our last update, which happens, if you can recall, it's like around 1 year ago already, during August of last year, and the Bloomberg Electric Vehicle Index, which represents the entire EV supply chain from raw materials to battery manufacturing and EV makers, which represented as the blue line, has underperformed the selective autonomous and electric vehicle index, which is the orange line, which consists of mostly car makers and distributors. This is because that the recent rally is mostly technological driven, while the materials and manufacturer sector were laggards. So, but for the entire 2022, both index suffered quite heavily, contracting by more than 30% each. So in this sharing, I would like to reiterate that we are still positive on the global electric vehicle outlook, but have gotten more and more selective on the different segments of the entire supply chain. Next, so in contrast with the stock market, right, the electric vehicle car sales has saw yet another record year in 2022, despite facing challenges such as disruptions in supply chain, uncertainty in macroeconomic and also geopolitical landscape, as well as high prices of commodities and energy prices. So we are still seeing another record sales for EV, so reaching the 10 million mark, and a 55% growth from a year ago, while the share of electric cars in the overall market rose from 9% in 2021 to 14% in 2022. So this demonstrates like a more than tenfold increase from their levels in 2017 at around 1.36%. So although the huge growth in EV in the past can be said contributed by the huge support by governments, this will make investors think that because that all of these kind of subsidies as well as tax incentives, they can't last forever. But what will happen next is what we really care about. So despite the phasing out of EV subsidies in many countries like China, which is one of the powerhouses in the entire EV industry, we expect that the favorable cost structure of the electric cars to outweigh the effects of the subsidy, EV subsidy phase out. So similarly, with the rest of the world, we see price war between EV car makers would result in more affordable EVs being rolled out, leading to increased sales for EV makers, although they may face margin erosions. So this growth is likely to be sustained with the global EV market is expected to reach around 39 million units sold by 2030 at a cumulative annual growth rate of around 21.7% during the forecast period of 2022 to 2030. So we believe that the charging we believe that the charging infrastructure will underpin further EV growth. So deployment of the public charging infrastructure in anticipation of growth in EV sales is critical for widespread EV adoption. So growth in EV sales can only be sustained if charging demand is met by accessible and affordable infrastructure, either through private charging in homes or at work, or even public accessible charging stations. So from the EV charging station charging site segmentation, which is you can see from the left hand, the chart on your left, the pie chart on the left hand side, more than 80% of the charging stations were public charging stations, meaning that public charging stations stood most of the EV charging market share. So similarly to global EV sales, the EV charging market saw yet another record year, with both the slow and fast charging stations increased rapidly from a year ago. So there were more than around 600,000 charging points installed in 2022, and around more than 300,000 fast chargers increased globally in the same year. So both types of chargers were dominated by China, which owned more than half of the global stock of public slow chargers and more than 80% of the public fast charging stations. So other than the public charging stations, battery swapping technologies are gaining momentum in EV charging space, with China being the leader in the battery swapping for passenger cars. So the total number of battery swapping stations in China stood at almost 2,000 at the end of 2022, which is more than 50% higher than the end of 2021. And NIO, I think some of you might have heard before, the car brand called NIO, which produces battery swapping enabled cars, and the supporting swapping stations runs more than 1,000 battery swapping stations in China. So reporting that the network covers more than 2/3 of the mainland of China, and that half of the charging swapping stations that were installed in 2022. So not sure if any of you have swiped before or scroll past the video of news like battery swapping technology, whereby users could just drive into any of the charging stations, they sit in the car and wait for 5 minutes, and then you get your new battery is ready to go. Unlike conventional traditional charging stations, especially for slow chargers, where you for a 400 to 500 kilometer car, you need to charge more than few hours to 5 hours like that to get your car fully charged. So this battery swapping technology is really a technological revolutionary for the EV industry, which expected for this market share to grow further in the coming years. So the widespread adoption of EVs will require exponentially more charging points for both public and at home, so requiring up to 1 trillion of investments by 2040. So faster charging times are coming, but are reliant on rapid chargers that are in short supply, but necessarily to extend the base away from commuting and local journeys. So the need for infrastructure is recognized by both industry and governments, and will accelerate as more countries make bold statements about banning pure internal combustion engine cars at a set date. Let's say as with UK and EU, they plan to stop the internal combustion cars by 2035. So with the ability to recharge the car batteries is a key factor in the consumer decision when they are opting in to buy an battery EV. So public charging points remain very limited as of now, even if governments and cities have moved towards banning the internal combustion engine vehicles. So given the need for subsidies to build infrastructure which will cost around more than 1 trillion, as shown in this slide over here, it will largely be down to the policymakers such as with countries like Europe setting target of 1 million public charges by 2025 versus what they have currently had in 2022. So as well as the US Inflation Reduction Act has committed like more than 7.5 billion to charging infrastructure. So moving on, EV charging market is expected to grow at a compounded annual growth rate of 32.5% to 2028, which will fuel growth towards the EV market as well. So we expect the charging market to further underpin future EV growth from their current levels today, as it is very important. The public charging infrastructure, accessible to charging infrastructure is a very key important point when it comes to consumers opting in to buy an EV. So next, now let's take a look at the case of China, which is one of the leaders in the EV industry. So the EV market remains very dominated by China. And in 2022, sales of BEV, which is the battery EVs, in China experienced a significant 60% increase compared to 2021, reaching a total of 5.9 million units, as I can show it in this chart here. So this accounted for nearly like around 60% of the electric car registration worldwide. So and also the share of the electric cars in China's domestic car sales reached around 30% in 2022, which is a substantial increase from 16% in 2021 and less than 6% between 2018 and 2020. So then along the years, the market share of battery EVs has been increasing, and even at a faster pace compared to the plug-in hybrids, as they stood more than 20% of the market share of EVs, as you can see from this chart here, where you can see along the years, starting from 2021, the market share for the battery EVs. Okay, basically, generally, battery EVs, the main differentiation with battery EVs and plug-in hybrids is plug-in hybrids, they can use either oil or electric, and then when they want to charge, they need to plug in their to charge, and then when they run out of electric, they need to use they will auto switch to like oil. But for battery EVs, they don't have the option to opt in for oil, so they are fully battery driven. So, and then you can see that across the years, the market share of the battery EVs has been growing at an exponential rate, and even faster than the pace of the plug-in hybrids. So, and then we think that this trend will continue moving forward, given that plug-in hybrids, eventually you also still need to depend on some oils, crude oils. Yep. So next, the battery demand for EVs grew as the EV sales pick up pace in China, and when China is a major powerhouse in the EV battery space, with the China's CATL, the contemporary Amperex technology, and BYD continue to hold up to the top two position with global market share of around 35% and around 16% respectively. So CATL's battery is expected to maintain its #1 position, as it is in high demand in passenger cars such as Tesla Model 3, Tesla Model Y, the SAI, some other brands that you might not be very familiar of, but it's it's domestic China car brands such as SAIC and GAC. So all of these, they are very depend on CATL's battery, and as well as the overall Chinese commercial vehicle market. So we also have other Chinese names as well as in the top spot, such as CALB, as you can see from the chart on your right hand side, Goshen High-Tech, Sumodo, and Eve Technology. They are all they are all not just the leaders in the China battery itself, they are also the top 10 global EV battery makers in the battery supply chains. So, but in China's space alone, CATL remained the top spot with around 50% as of 2000. The data here is as of 2022. So followed by BYD's 23%. So while on the chart on your left-hand side, you can see that China electric EV battery installation has been growing in the past few years, prominently in 2022. Even despite all of the shares got hit pretty badly, but still pretty good. So while CATL has been losing some market share to the young and fierce BYD across the years, recently CATL, as you can see from this over here, CATL has taken back some ground, sending signals that they are still a king when it comes to battery making. So other than that, we are still seeing China EV makers making effort to expand overseas, and they're looking to expand their footprint globally. So China is the world's largest EV market and made up of almost 60% of the global EV sales in 2022, as I mentioned just now. And Chinese firms play a critical part in the global EV supply chain because, as I also mentioned just now, CATL, they help Tesla, Model 3, Model Y, they very heavily depends on CATL's battery. So also Chinese EV players has tried to challenge Tesla's global dominance, driven by advanced battery technology, competitive products, and manufacturing experience. EV could account for half of the China NEV domestic and support sales in 2025, up from around 1 in 3 in the first half of 2023. So China's passenger vehicle exports clearly nearly doubled in the first half of 2023 from a year ago, and Southeast Asia and Europe could account for more than 90% of the China EV exports in 2023. So BYD alone could grow exports much faster than its peers and build on its leads in China. As you know, before Tesla announced to venture their footprints into Malaysia, we have already have a BYD making their move first. So exports could account for around 7 to 8% of BYD's sales in 2023, up from around 3% in 2022, as it plans to ramp up production in Southeast Asia. They partner with local firms and get the license to distribute locally. Most recent case was they team up with our local conglomerate, Time Darby, to distribute their cars, and then we can see more and more BYDs on the road. So BYD also stands for Build Your Dreams. So next one, we think that there is still a lot of room for the EV growth outside of China, and especially in the Asia region. And there is plenty of room for EV growth. So China, Europe, and US, these three major players were major markets for the electric cars, accounting for more than 95% of the global EV sales in 2022, whereas emerging markets and developing economies outside of China accounted for only a fraction, just a little bit of the global market share of the global electric vehicle markets. So demand for electric cars has increased in recent years, but sales remain low due to lack of access to charging infrastructure and relatively expensive for the majority of the population. Thus, moving forward, with increasing number of charging infrastructure, access to affordable EVs as a result of price wars and supportive policies from local governments, we expect sales for EV cars, for both new ones as well as the used ones, can be expected to increase in the emerging markets and developing economies. Thanks to government supports, there was already a notable boom in electromobility in India, Thailand, and Indonesia. And collectively, sales of electric cars in these countries grew more than tripled in 2021, reaching nearly 80%, as you can see, 80,000, as you can see from this chart on the right-hand side. So sales in 2022 were 7 times higher than the ones in 2019, way before the COVID-19 pandemic. So looking at the chart on your left-hand side over here, although you may see that the EV sales growth in the Southeast Asia is slower than its global peers, but then it is expected to pick up in soon in the coming years and deliver impressive growth, because you can see that as I mentioned just now, the three powerhouses, US, Europe, and China, stood like 95% of the global EV market share. But then once some years later, they'll reach a saturation stage where it is very, very hard to increase more market share. And then because many of the citizens or your household has already owned an EV, so where are the opportunities at? It's the ones that haven't been developed yet, which are in emerging markets and the developing nations. So you can see a lot of EV brands starting to venture into like Southeast Asia and any other parts of Asia, especially in other emerging markets, to quickly grab some market shares before it's already too late. Because they already know that this place here in Southeast Asia and other parts of the emerging markets have the greatest opportunity. So however, it is expected for like Southeast Asia as well as the other parts of emerging market, it is expected to pick up soon in the coming years and deliver for their EV market share and deliver impressive growth. As you can see that while other regions market share is slowing down in the later years, the global EV is growing at a faster pace. You can see that they have reached a mature stage or saturation stage where their growth is started to slow down. But then other parts of Southeast Asia as well as India has on a very like 90-degree rise. So now then, we would like to take a look in the context of Malaysia, where we believe that although we have started quite late, but the EV adoption trend in Malaysia is slowly and surely. So looking back at our home country, EV sales has been increasing as more and more new models has been introduced. I remember at first when BYD just joined Sime Darby to announce launching their EVs in Malaysia, their SUV, right? This has gained interest across the local Malaysia household because BYD is known for their affordable cars and they have decided to sell their SUV, the Atto 3, for around 150,000 in Malaysia. And this is because for this middle price range, right, buyers are able to own a fully electric car, as electric cars has been considered to be like modern, futuristic cars that in most people's perceptions. And soon after, Malaysia introduced the icon for the EVs, which is Tesla, into the country for around 200K for the SUV model, which is below most people's expectation. And not to mention that Model 3, which is their entry car, the sedan car, it is expected to be even sold at an even lower price. So this entirely new driving experience, as well as modern looking cars, has elevated user experience. Imagine you can just drive your car without your hands on the steering. You can do other things you want. It has always been dreams for many of the people. So all these efforts. So and also the government has provided a lot of supports for all of these car brands, especially for Tesla. They allow as I mentioned earlier, this manufacturer to consumer type of sales without going through any distributors as well as dealers. And this is like the first case in Malaysia. So all of these efforts has certainly pushed the adoptions of EVs in Malaysia to a new high, making Malaysia one of the leaders in EV adoption in the Southeast Asia region, just behind Thailand and Indonesia. But then, of course, Thailand and Indonesia has led Malaysia in EV sales by a lot, but we are still quite strong and quite leading ahead of other parts of other countries in the Southeast Asia. So moreover, the Malaysian government has racked up its efforts to extend EV exemption deadlines in the revised budget 2023 to incentivize local electric vehicles to uptake, including import and excise duty exemptions for their fully EVs, and also has been extended into the end of 2025 to incentivize local electric vehicle uptake. So this, despite lagging behind the EV adoption, we believe that EV sales in Malaysia will improve given the rollout of EV infrastructure, availability of more affordable EV models such as BYD, and also strong government support. Next, from here, we would like to take a look at what is the investment case for the EV, because I've talked about a lot of EVs already, right? So now let's take a look at what are where to invest in the EV supply chain. So first of all, we are neutral on the raw material sourcing companies. So the increase, this is because the increase of battery demand drives demand for critical materials. And in 2022, the increase of battery demand and supply chain bottlenecks has caused prices for strategic materials to skyrocket, if you remember last year, especially for all those nickel and all those cobalt, generating handsome profits for all of these material sourcing companies. And in the same time, lithium demand exceeded supply as in 2021, despite the 180% increase in production since 2017. And in 2022, about 60% of the lithium and if I'm not mistaken, around 30% of cobalt and 10% of nickel was demand was for EV batteries. And the chart showed that on this left-hand side here, showed that the lithium demand for EV batteries has increased throughout the years. And as has already been seen for lithium, mining and processing of these critical materials will need to increase rapidly to support the energy transition, not only for EVs, but more broadly to keep up the pace of demand for clean energy technologies. Therefore, even though prices of major strategic materials are off their peaks already, but they remain above the pre-pandemic levels, and the increase in demand will keep prices of strategic materials elevated, especially current supply of lithium is insufficient to meet demand. This would lead to higher revenue for upstream players. But in the near term, the huge fall of strategic materials prices will certainly place pressure towards all of these companies' profit margin, especially affecting their year-over-year growth. That's why you can see some sell-off in these companies due to high base effect. So that's why in the near term we keep a neutral stance in this segment. So in recent times, don't know if you have heard before, there is something called the alternative, which are the alternative options for the lithium-ion batteries. Which is the sodium-ion batteries. It has gaining more and more notable attention. This battery technology offers a unique advantage as it utilizes more cost-effective materials compared to lithium-ion batteries, resulting in more affordable battery solutions. Additionally, this sodium-ion batteries completely eliminate the need for critical materials, making them the only viable chemistry that does not rely on lithium. So CATL, which I mentioned a couple of times just now, has developed a sodium-ion battery that is estimated to be 30% cheaper than the lithium-ion battery. So, however, it is important to note that all these sodium-ion batteries have lower energy density when it's compared to lithium-ion batteries. So this makes them more suitable for urban use vehicles with shorter ranges and more stationary storage applications. So, however, challenges may arise when deploying sodium-ion batteries in locations where consumers prioritize long-range autonomy, where charging infrastructure is less accessible, especially in the emerging markets. Thus, lithium-ion batteries will still be the trend of EVs moving forward. But as I mentioned just now, we are still kept a neutral stance on this these raw material segments because we think that it may face some headwinds due to some margin compression because some falls in revenues because prices has been falling. Next, we are positive on the battery chain, such as the battery pack assembly, cell assembly, module production, and as battery demand for EVs continue to rise along with the increased sales of global EVs. So the demand for all of these lithium-ion batteries witnessed a substantial surge, rising by approximately 65% in 2022 compared to previous years. This significant increase can be mainly attributed to the growth of EV, electric passenger car sales, which experienced a remarkable 55% rise in new registrations in 2022 compared to 2021. The global sales of battery EVs and as well as the plug-in hybrids are surpassing the sales of hybrid vehicles. So what is hybrid vehicles? What is the difference between hybrid vehicles and plug-in hybrid vehicles is that hybrid vehicles, they can use to switch between between electricity and oil, but plug-in hybrid, they need to finish their electric before they change into oil. So most prominently, the battery demand for vehicles grew over like 70% in China, while electric car sales increased by 80% in 2022 relative to 2021, as shown in the growth in the battery demand, slightly tempered by an increasing share of plug-in hybrids. So as all of these battery electric vehicles and plug-in hybrid vehicles generally have larger battery size, the demand for all these batteries continue to increase accordingly, and paired with like relatively low competition in the battery market, where few players dominated the market, such as you have the likes of CATL, LG Energy Solution, BYD, Panasonic. We see higher profitability for these players as less number of people is sharing the same pie. So besides, prices of lithium carbonate, which is one of the key materials used in manufacturing an EV battery, has dropped significantly off their peaks, which will lower down input costs for battery manufacturers. As such, the global EV battery demand is expected to grow at a CAGR of 24% from 2022 to 2030, benefiting the global EV battery makers. So next, battery makers could see price competition heat up again as their aggressive capacity expansion risks overshooting demand. So global EV battery usage could grow more than double to around 1.2 terawatt hours by 2025 from around 520 gigawatt in 2022. We calculate that if the battery electric vehicles and the plug-in hybrids each reach around 21% of the new EV units sold. So a faster uptake of the EV mix could push the battery usage to 1.4 trillion terawatt hours, which is higher than the estimated 1.2 terawatt hours, which might absorb about 65% of the industry available manufacturing capacity. So smaller battery market makers with not so competitive cost structure will face like some margin pressure as automakers demand battery price cuts to strengthen the EV's profitability. As such, market is predicting that battery pack prices will fall around 18% to $124 per kilowatt by 2025. Compared to 151 in 2021. So, in 2022. So all of this might sound a bit gloomy for the battery makers' perspective because your battery cost is getting more and more cheaper, and then it might hurt your profit margin. But however, we believe that the rise in sales and decline in raw material prices will outweigh the cons of falling battery prices. This can be shown in the latest results of CATL, which is the leader in the EV battery making industry. So CATL is poised to sustain its strong sales growth through the second half, while lower lithium cost and greater scale of economies give margin a bulwark against falling battery prices. As you can see that in the second quarter of 2023, you can see that their margin is actually got increased. This the white line here shows the profit margin, the gross margin of the company, and it has increased. While the blue line here shows the prices of lithium raw material. So you can see, although the prices of lithium raw material is decreasing, but their profit margin is actually increasing because of they have although battery prices has been falling, because of this lithium has been falling even more. So domestic demand remains very robust as China EV sales are speeding up on their new EV model rollouts and the extended zero purchase tax. So the battery makers growing presence overseas, where supply, demand, and then also the battery pricing dynamics are more and more favorable than in China. So this can also be buttress sales and profitability. So overseas markets continue its 35% of CATL's first half revenue, and around 23% for all in 2022. So as I mentioned just now, gross margin tick up 22% to around 22% from 21% in the first quarter. And despite a nearly 15% drop in the average battery selling prices. But then you can also look at the lithium raw material prices also falling. So as such, sales volume looks on track to finish this year at a 40 to 50% higher after more than doubling in 2022, which is still very good for the company. So as such, we are still quite very positive on the EV battery making chain, as we see players we're still benefiting from all this growing EV sales, growing demand, even if battery prices are falling. However, we are cautious on the EV makers due to more stiffer competition in the industry. The EV car market is witnessing an increasing number of new players, particularly from China and other emerging markets. So these new entrants are introducing more and more affordable models, which has the potential to drive down the overall car prices. So several have begun trimming costs to adapt, such as Tesla, Ford, BYD, and NIO. So the two large EV manufacturers, which is Tesla and BYD, moves all their actions certainly put pressure on other players in the EV industry to make cars more affordable, driving down their profit margins, which you can see from this chart on your right hand side. So Tesla and Chinese rivals failed pledge in July to avoid abnormal pricing, shows that the intense competition and more price cuts ahead. And the average selling price for the EVs could decline by around 10 to 15% in 2023. So Tesla rivals are crowding the market with new models in the second half, but Tesla itself, they didn't actually roll out with much more models other than cutting their prices. So all this and these new models from their competitors are adapting more and more aggressive pricing strategies and even willingly to sacrificing profit from volume, which will weigh on their company's EBITDA margins, cash flow. So after lowering prices in January and no major new model launch in China, Tesla is responding with a cash rebate of around $480 as per the news via a loyalty referral program. So BYD in this case extend their lead on Tesla with a 37.4% market share, while other Chinese EV makers were catching up with Tesla. As you can see from this chart over on your left hand side. So the market shows a consolidation trend with top three accounted for 54% of market share compared to around more than 30% in the same period of 2021. So as such, with increasingly stiffer competition in the EV market segment, we have turned negative as we see EV car makers may face margin compressions in the weeks to months to years ahead. Although the EV industry has experienced a tremendous rise in terms of sales volume and market share in the past few years, we still believe that there is still a lot of market share left to capture. And the Bloomberg Electric Vehicle Index is currently trading at around 13 times their PE ratio based on their 2025 earnings. And by applying the fair PE ratio of 25, we have arrived at an upside potential for around 87% by 2025. And furthermore, in terms of government incentives, several policies announced in 2022 and early 2023 relate to development of EV manufacturing, in addition to EV deployment, supporting EV manufacturers and companies through direct incentives along the EV supply chain. So such as the extensions of EV subsidies in China, Inflation Reduction Act in US, and the Green Deal Industry Plan in the European Union. And we also seeing Asian countries rolling out their own incentives to increase EV adoption. So for investors who are seeking to tap into this EV space, they can consider investing in the CleanShares Electric Vehicles and Future Mobility Index ETF, with the ticker symbol KARS, CARS. So this is an all-rounder ETF that covers all part of the electric vehicle supply chains, from upstream, which we have the commodity sourcing companies such as Albemarle Corp, to midstream battery pack assembly, cell assembly, module production, like you have like Panasonic, CATL, and then also downstream we have car makers such as Tesla, NIO, BYD, Li Auto, and it tracks the performance of the Bloomberg Electric Vehicle Index, providing investors with access to companies critical for the development of the EVs all around the world. And this comes with an expense ratio of around 0.7%. So with that, I've come to an end of my sharing today, and here are a few key takeaways that investors could take a look. And we think that, so overall, we think that there are still opportunities to invest in the EV market. And for investment, for advice or even ideas, you can consider the CleanShares ETF, Electric Vehicles and Future Mobility Index, with the ticker symbol CARS. So as such, I have ended my sharing today. If you have any question, please feel free to put it on the Q&A box, and I will address it soon. So I've seen a question over here. May I know how fast this trend affect the oil and gas industry? Actually, for a lot of companies, a lot of the countries, right, they are targeting to end all of this, the usage of internal combustion engine cars by 2050. But different countries, certainly there are different years, but a lot of countries, they set at around 2050. But then this is only for the cars industry. But then for other industry that depends on like oil and gas, they still have a different time frame, time limit. So it's very you couldn't say that by 2050 everything will be all oils will be useless. So it's only for the automotive industry. And then of course, because all of this, they want to reduce the usage of all this oil and gas, right? And all of this has caused underinvestment in all those traditional oil and gas industry. But then we also think that with all of this government support coming in on the EV industry, it will certainly give a good push towards the EV industry. And I hope that answers your question. So next one, the index that it is tracking is the Bloomberg Electric Vehicle Index, and the ETF is the CleanShares Electric Vehicles and Future Mobility Index. Based on your research, do you foresee all the petrol stations will convert into fast charging station? Actually, for us, right, we don't think that for the entire public station to fully convert it into charging station is it's too far beyond, and we don't actually foresee that far things that will happen that far beyond. But then for us, we think that they can co-live. That means that petrol station, they can also put up expand a spot to provide charging stations, such as and then already some petrol stations have already did that way, where they install charging stations for in their petrol stations, so to cater to different segments of the car users. And I hope that answers your question as well. Thank you. Okay, so it includes any LED makers for EV. This index, although it doesn't disclose each and every one of their holdings, but I do not, for now, I do not, I'm not aware of they are holding any of the EV LED makers, maker companies. So if you want, I'll try to look more into it and give you an answer. If you could drop your maybe your email or anything here. Thank you. Okay, the last question here we have is, and when you mention oil will be used, I didn't mention that oil will be useless. I'm saying that government countries of the government, many government of the country, many countries of the government, they have started to push against like reducing usage of oil and gas, and then they want to make every cars on the road like battery electric vehicles. So it's not to say that oil will be useless. Oil will still be very useful, and then just that in this green transition, right, transitions towards more and more greener energy, there's certainly governments are certainly pushing towards the usage of more and more green energy, especially when for the things that they can change, right? For some industry that's still very heavily reliant on traditional oil, that see less or too expensive alternative, this industry will continue to rely heavily on oil. But then for the automotive industry, you can see that with all of these EVs that roll out, and then they are more cheaper, more carbon neutrality, and then they are more as well as they can make it in more lower time. So all these benefits outweigh like traditional internal combustion engine vehicles. So we can see this the push towards this is a step that sacrifices lesser stuff. So it will certainly be benefited to the overall like the global carbon emissions and stuff. So so it's not to say that oil will be useless, but just in this automotive industry, they will move towards more and more more and more growing market share for the battery electric vehicles. So yep. Let me see, there's one more question here. Let me confirm this again for my understanding. Future. Yes, in the future, yes, this is somehow correct. So in the future, we still need oil to not charge our car. Charge our car, we can use through electricity, but a lot of those industrials manufacturing side, they really depend on a lot of oil, and then also some in offices and home, we don't really depend much on oil. But yeah, for a lot of factories, they still depend really heavily on oil, and then they see less. Now we don't have any better alternative for such things. So in the future, we will still depend on oil, but just less reliant on oil. Yeah, and I hope that answer your question. Thank you. Okay, with that, no more questions. Okay, then I think our webinar will end today, and I hope you get something fruitful today. Thank you all, and we hope to see you soon. Thank you.